text me here. Easy, right? No doubts? You can text me here. We'll move on. Okay, I hope you got it. You can proceed. Okay. Okay, done. Alright, alright. Alright, this is gap up and gap down. If it opens at a lower price than previous day, it's gap down. Same price, it is flat. Next is bull and bear market. Bull market is a positive market and stock prices will move upwards in this market. Okay, bull market means positive market. Stock prices will be moving upwards, will rise. Bear market is a negative market and share prices move downwards in this market. Money can be made in both bull and bear market, and even in a flat market it can be made. I'll be teaching you the same later. This is bull and bear. Bull means price is moving upwards. Bear means price is moving downwards. This is blue chip companies. These are the companies which have a high market capitalization. That is, just remember it as they have too much money. That's all. These companies are very famous and well established. Very well established. They have a wide range of business and they will not fail. For example, HDFC and Reliance. They are blue chip companies. This is the important thing which affects stock price. This affects stock price. Depending on news, so many stock prices will move up or move down. Okay, let's see what are the news, what are good news for a company and bad news for a company. Share buyback. Share buyback means there's an ABC company. They are announcing they're buying back shares of their own company from public. Sorry, from public. What it means is they want higher percentage holdings. It means the business is good. The business is good. They don't want to share their future profits with the public, so they're announcing they're buying back shares. Okay, they want to increase their holdings in their own company. That is, from, let's say they have 65% holdings in their company, they just want to increase it to 67, 68, let's say 68. They won't suddenly increase from 65 to 75 or 80 or something like that. Those many shares they won't buy. Slowly they'll buy like 65 to 68 percentage. Okay, 68 percentage. It means they have confidence in their business and they don't want to share their profits with the public, with others, so they're buying back the shares of their own company. In news you'll be seeing that this company has announced buyback. It means it is a good news for the company. The company is doing well. So what you can do is you can stay invested in the company. If you have already invested in the company, you can stay invested, or after this news you can go ahead and invest in the company for long term. All this is for long term, not for short term traders. Next is dividend announcement. Dividend announcement is a good news. As I already said, a company announces dividend only when they perform well. It means dividend announcement means they are performing well. That's why they are announcing dividends. Next is higher EBITDA. EBITDA means, just remember it as profit before taxes. Higher higher profit is a good news. You'll be seeing in the news that this company has given higher EBITDA. It means good news for the company. Stock's price will rise up next day. Next is promoter increasing stake in the company. You'll be seeing a news like this or like this. Both are same. He is buying back stocks or shares of his own company. Okay, if a company next is if a company signs new deals and MOUs. New deals means more money. New MOUs means more money. More projects, more money, more profits. This is good news for a company and stock price will move up next day. Next is when the company's ratings have been increased. Ratings means each company has a rating like AA plus, next is AA minus. Just an example, if the company's rating has been changed from AA minus to AA plus or BB plus to AA minus, like this, you'll be seeing, you're able to see, right? Like they are increasing the ratings of the company. It means the company is doing well, so they're getting good ratings. It means company's stock price will move up next day. Next is if the company looks into new business opportunity, just like this, new deals, MOUs, new business opportunities. They're starting something new, like Reliance started Jio at that time. Okay, new business opportunity. Next is if a better CEO has been appointed. Better CEO means he'll be doing good business. He'll be bringing in more profits. Has been appointed, stock price is going to move up. Next is if new big investors invest a huge amount in the company. Big investors means from Abu Dhabi, from America. You'll be seeing in the news. New investors would be investing like 10,000, 20,000 crores in a company. Like for example, last year from Abu Dhabi, someone invested 20,000 crores into Reliance. Next day, Reliance shot up by about 150 rupees or something. This means stock price will move up. Next is if the company increases the cost of the goods it sells. Sometimes it can be negative as well because the company will lose market share. For example, if Mahindra before last 2 months it increased the price of its cars, it can lose its market share, right? People may not buy Mahindra and buy some alternative cars. So this can be also a negative news. Don't depend on this news. 70% of the time stock price will move up, but 30% it can be negative as well. Next is bad news for the companies. Just like this, just like good news, opposite of it, when the EBITDA, that is profit before taxes, is less than expected. Next is promoter pledging shares. Pledging means he doesn't have anything else, he's pawning his shares and getting money for his business. This is the last step he'll be taking because he doesn't have any other money. He's pledging his shares and getting money for his business. Okay, this is bad news for the company. Next is when the promoter doesn't pay back his loan on time. When will he not pay? When the company is not doing good. This is when the promoter decreases stake in his own company. For example, S Bank. S Bank stock crashed before 1.5 or 2 years. How it happened is slowly promoter holdings started going down. Like from it was about 60%, I guess. 60% it went to 55 slowly, 2 months once, 1 month once, like this. It went to 50, then it went to 40, 20, like this. It came to 15 or something. Then suddenly one day stock crashed. This is how a crash happens. When a crash is going to happen, the promoter will already know. That's why he's selling his stake in the company. This is bad news for the company. And when the ratings go down, like from BB plus it goes to BB minus, or from AA plus it goes to AA minus, it impacts the stock price. When big players sell a huge amount of holdings in the company, you need not trust this, because sometimes they just want to make profits. They just may want to make profits, and they're just exiting their position. They've bought some shares, they made profits, they're just exiting. This can be 50-50. Next is when there are bigger competitors entering into the market with the same business. For example, Airtel was the market leader before. After that, Jio came into play. It means bad news for the company, bad news for Airtel. Alright, next would be IPO. IPO is initial public offering. Example, a company wants to list itself in NSE and appear for the first time to the public to borrow money from the public. This whole process is called IPO. In IPO, there is a base price fixed by the company for their share. The public needs to apply for an IPO before it gets listed in NSE. IPO normally means a company wants to raise 10,000 crores for their business. This is the plan. So they're fixing a price, like let's say 200 rupees and 40 lakh shares. So this 200 into 40 lakh shares, they'll raise 10,000 crores. This process is called IPO when the company wants to list itself on NSE website and borrow money from the public for the first time. They're fixing this base price and number of shares. This into this would be the amount which they want to raise for the new business. Okay, now what happens is, if there is more demand for the company, when it gets listed, we need to apply. Like we can't buy just 100 or 150 or something like that. It will be fixed by the company, like 300 shares or something. 300 shares at 200 rupees you'll be buying. This is your investment. For every IPO, this should be your investment. 200 rupees into 300 quantities. This will be your investment. If there is more demand, the first day when the company appears in your NSE, if there is more demand, it will appear at 250 rupees. Just an example. All these are examples. If there is more demand, you have bought it at 200, but it's appearing at 250 rupees. So you have already made 50 rupees on this, 50 rupees profit. That is 50 into how many quantities? 300. 300 multiplied by 50 is your profit. But if there is less demand for the company, if there is less demand for the company, you applied for 200, but when it gets listed, it's appearing as 180 rupees. You have lost 20 rupees here. So this is risky. IPOs are always risky. Okay, everyone will be applying for an IPO, but they don't know the risk behind this. Next is transaction. Transaction is stock market mainly works on buy and sell. This buying and selling keeps happening in microseconds, multiple number of times. Buying and selling happens only with the help of brokerage. For example, Angel Broking, Zerodha, all these are brokers. Okay, this is a medium which we will be using. There will be app based or website based. We can't directly go and sell or buy from NSE. These are brokerages or mediums which we will be using to buy and sell. The brokerage, what it does is, we'll be placing orders. Like you want to buy Reliance is now at 2060 or 80 something. You want to buy 200 quantities or 200 shares of Reliance. What you'll do is, you'll go to Angel Broking or Zerodha or anything. There are so many brokers, but these are the best brokers. Angel Broking or Zerodha. You'll be placing at what price you want to buy Reliance. That is like 2065 or 70 or whatever. You're just placing at what price you want to buy Reliance and how many quantities. Like you want to buy 200 quantities. You're just entering all these details, and what happens is, you have entered all these details. The brokerage collects our orders and sends it to stock exchange or NSE and completes our orders. It might be a buy or sell order, but it happens anonymously. This is how transaction takes place. Once this transaction takes place, next process would be clearing. Once the trade is executed by us, that is, we have entered the quantity and at what price, it should go through the clearing process. In clearing process, there's something called clearing house. It identifies which stock is required and how much quantity is required and for what amount. Once this is done, next process is settlement. The buyer, if we are a buyer, we bought Reliance, the buyer receives the share in his broking account. The seller, someone sold it to us, he receives the payment in his broking account. Simple. Next is bid and ask. Guys, if you see this, you'll get confused. Just remember, bid means buying, ask means selling. Okay, bid means buying, B for B, ask means selling. Okay, the stock price moves according to bid and ask. Demand and supply, I already said. So when demand is high, stock price rises, and demand is low, stock price falls. Technical analysis, this is the main thing which we'll be using. Technical analysis just means It shows you what action should be taken on a particular stock, either to buy or sell, or if you have already bought it, if you want to hold, or if you want to get rid of it. It uses many indicators to determine what action should be taken. Indicators are all these are indicators. This line I have manually added all this line, all these lines, these are just references. We'll be looking at these indicators and we'll be planning whether to buy or sell a stock. Okay, this is technical analysis. We'll be using the charts, we'll be adding some indicators to our charts, and we'll decide whether to buy or sell. This is technical analysis. It's completely independent of fundamental analysis. Fundamental analysis is nothing. Fundamental analysis is you look at a stock, you look at performance of the company and invest. You don't look at the price and buy or sell. You look at the performance of a company and decide whether to buy or sell. That is if you are an investor. But technical analysis is you are a trader. Technical analysis is you are a trader. You want to buy. You'll be looking at the price and your indicators, and you'll decide whether to buy or sell. Fundamental analysis is if you are an investor, you'll be looking at fundamental analysis. Guys, I'll just cover this alone, trend lines, and we'll wind up. Trend lines is we'll be drawing something manually to understand. Guys, let me just tell you how a stock moves, stock price moves. A stock price, 1 second. A stock price will not move like this. Okay, a price will not move like this. Instead, how it moves is buying. Okay, selling. Big players do this. They buy, they book profits here. Okay, they book profits here. So what happens is stock price moves down. Then again they buy, stock price moves up, they sell, it falls down a bit, buy, sell, buy, sell. This is how a stock price moves. Okay, so trend lines are lines which will be drawn by us to just identify this path. Why we are identifying this path is we'll know where to buy and where to exit. Normally I don't follow all this. This is what everyone teaches you. I just want you to know the concept, that's all. But we won't be following it much. These are trend lines. Normally there is uptrend, stock price is moving up, so uptrend, and there is downtrend, stock price is falling down, downtrend, uptrend, downtrend. If stock price is not moving at all, there is no trend. No trend. This is up, this is down. Stock price is not moving upwards, it's just maintaining at the same level. So no trend. We can't use this trend line concept in no trend. Now what are we going to do is, stock price is continuously moving up in Reliance on this is I think Friday's data. Friday, what happened is stock price was continuously moving up. Okay, we are just selecting 5 minutes time frame. We're just going to do intraday trade, that is buying and selling on the same day. Clicking on, we are using candles. We're using candles. What we are going to do is, we are going to draw a trend line. Trend line is, just click on this trend line here and trend line. Okay, we are just marking stock price is moving up, so we are connecting the down parts of these candles. If we connect these two candles and extend it, all these would not have formed before, right? So we are just connecting and extending it to identify that it will follow this path. It's exactly following this path, right? So what do we know from this is, okay, what do we know from this is, stock price will be moving it is moving in this direction, like this, buying. It's not complicated. Okay, here let's just take an example. You have drawn, you have connected these two and extended it, so you know now that the stock is going to travel like this. So when it reaches this level, that is the price is 2008, as you can see here. You are waiting for the stock to touch this level, exactly 2008, and you're just clicking on buy. What happens? The stock price slowly moves up to 2014, and next 5 minutes it moves up to 2027, right? So now you know where to buy, correct? You know where to buy. This is why we use trend lines. And you can draw this as well. You can connect the tops of these candles. They are called candles. If you know this and this, you know where to buy. You'll be buying here, and you'll be selling here or here or here, anything, right? Guys, got this concept? Simple, guys. We're just connecting these to identify where to book profits, where to buy and where to sell. Everyone got this concept? Simple. I'll just explain it in a better way later. It's confusing. No, not a problem. I'll explain it in a better way later. Others got it? After I teach candlesticks, it will be better. No, okay. Next week we'll be looking at candlesticks. At that time you'll get it. Okay, okay, perfect. Alright, guys, I'll just give you an assignment. So what I want you to do is go and create a account in TradingView. Create an account. This is a free account. You can create an account in TradingView and open some companies. Open some companies like HDFC Bank, Reliance, Axis Bank, SBI. SBI is SBIN. And what are the other companies? Nestle, Bosch, anything, whatever brand you like. HUL. Just type it and open it in NSE. Click on NSE. You'll be getting an option like full featured chart. Click on that. You'll arrive at this page. It won't look like this. What I want you to do is go here and click on 5 minutes. Go here and click on candles and watch the stock price. Watch the stock price and how it's moving. And one more thing is, at 8:30 a.m. not every day you won't be able to do it. At 8:30 a.m. watch CNBC news channel. CNBC news channel, like at least for 15 minutes. At least for 15 minutes they'll be telling some news. We watched good news and bad news for companies, right? We watched all this. You'll be getting all these in CNBC news channel from 8:15 to 8:45. You can watch from 8:30 to 8:45, or if you can watch from 8:15 to 8:45 as well, or till 9, your wish. Just watch what news is coming for what company and type the company's name here and watch how this news is affecting stock price. Got it? These are the assignments which you'll be following. And just if you want, just create a angel broking account. I'll send the link. If you use that link, you'll be getting some selling benefits. That is, when you do options trading, you'll be getting some sellers benefits. If you want, I can send you that. And I just want you to follow the assignment. Clear, guys? Till now, is it okay? Okay, trend line, if you didn't get it, it's not a problem. After I teach candlesticks, you'll get it. Okay, okay, guys. We'll wind up the session. Just please follow the assignment for 1 week and write it down. Write whatever you're finding it, whatever news. You have an account in Zerodha. Yeah, you can use it. But I won't advise Zerodha because there are some issues in Zerodha. I'll tell you what are the issues. I'll send the link. Guys, till now it's clear, right? We'll wind up the session. Just for 1 week, do this assignment and write everything down. Guys, if you text me, I won't be able to reply everyone. Just write down everything. We can discuss in the next session. We'll wind up. Okay, done. Alright, guys. Thank you. Take care. Stay safe. Thank you, guys. I'll share the video as well.